This video is about daily buyers, how you can find daily buyers correctly. If you are struggling with daily buyers, then this video is for you. Kindly watch this video to the end. Let's start by looking at time frame alignment. So these are the time frame I consider. And if I'm starting my high time frame analysis on the weekly, I look at for 4 hours time frame. Then from 4 hours, I look at 15 minutes time frame. If I'm starting off the daily time frame, I move to 1 hour, then 15 minutes. So if you look at it, we have 3 time frame. One is the higher time frame, which is where I look at for internal range liquidity to external range liquidity. And I also look at swing points in the market, and candle pattern, or we can say candle reaction. And for my medium time frame, which is the middle one, if you look at the weekly, after the weekly is the 4 hours, which is the intermediate time frame, is where I look out for structure, market structure. I look out for daily range. I look out for change in the state of delivery. I look out for choke and also PDRE. So the 4 hours time frame is basically where you do a lot of tasks on the 4 hours time frame. Then the lower time frame is for entry. This is what I do. So if I'm starting off the weekly time frame, which is the higher time frame now, I'm going to look out for internal range liquidity, external range liquidity. I will look out for swing points. I will look out for candle pattern and also how candlestick reacts, especially closing and opening above candles. Then the second one is the intermediate time frame. I look out for structure, daily range, change in the state of delivery. I also look at choke and PDRA. So this intermediate time frame, if I'm starting off the weekly, is the 4 hours time frame, while 15 minutes is the lower time frame for entry. And you have to use your entry model. It could be market structure shift, breaker block, mitigation block, swing formation, and so on. I have a video on entry model. You can watch the video so that you learn how to take an entry. So this is what I do with time frame alignment. And if daily is what I'm going to start with, I'm going to look out for daily as my high time frame, 1 hour as my structure, and 5 minutes as my entry. Now that we have an understanding of time frame alignment and how to use it in trading, let's start by looking at the weekly time frame. Then we move to the 4 hours time frame, then 15 minutes time frame. And we said the weekly time frame is that we're going to determine the direction of the market using internal range liquidity to external range liquidity, swing points, candle pattern, and candle reaction. So here we have that price has taken out external range liquidity. Then price will be seeking internal range liquidity as our draw on liquidity in form of fair value gap. So here we have a fair value gap as our internal range liquidity. And also we have another fair value gap here beneath that fair value gap. So since we have determined internal to external range liquidity, and we see that price has come into this internal range liquidity, let's see whether price is going to seek the external range liquidity from this internal range liquidity in form of fair value gap. So now we have seen that price has entered into the internal range liquidity. And what do we see here? I talk about candlestick reaction, and we see here that price entered into the fair value gap and reacted, and we see price is closing below this previous week low, which is inside our draw on liquidity, and we see price close above the fair value gap. Most importantly, we don't want to see this candle that have entered into the fair value gap close below the discount level, since it is a bullish fair value gap. We see that price has closed above this swing low as well as the fair value gap. So we're expecting price to be what? To be bullish. Now on seeing this, we need to go to the 4 hours time frame and frame our trade. And we said for the 4 hours time frame, we have what we call the intermediate time frame, and that's where we're going to talk about structure. We're going to talk about daily range, change in the state of delivery, PD arrays, and change of character. So let's go to the 4 hours time frame and see what the 4 hours time frame is doing. Here is our 4 hours time frame, and this is the internal range liquidity we've marked on the weekly, and this is the swing low on the weekly that price has taken. Now, what we need to do is to determine market structure shift, change in the state of delivery, as well as daily range and then PDRs. So now what do we have here? We see price comes into the internal range liquidity and then sweep the low below the weekly low. Then we have this candle that have swept this liquidity, which is our change in the state of delivery. So we want to see price closing above it for us to have our entry. So we see now price has closed above it, which tells us that the 4 hours time frame is bullish and also the weekly time frame is bullish. So what we need to do is to go to the 15 minutes time frame and frame our trade at the change in the state of delivery, because this is the change in the state of delivery. Go to the 15 minutes time frame and see what the 15 minutes time frame is doing. This is the change in the state of delivery on the 15 minutes, and we see prices close above it. So now we need to frame our trade from this level to see where we're going to take the trade. So now we have this. As soon as price created this change in the state of delivery, we see this order block on the 15 minutes time frame. So we can frame our trade from this order block. We can have our entry from this order block here, and our stop loss can be below the order block. Then we can take 2R, or we can look at the recent high in the market and target for our TP. So we have this high here. We can use that as our TP. So we can put our TP at this high. We see market continues bullish, and we see that price is at our TP. So price is consolidating, and now price is about to enter our TPs. Then we have here we have our TP taken. So this is how to use the weekly 4 hours and 15 minutes to determine your bias. This is how to determine daily bias from the daily time frame to 1 hour to 5 minutes time frame. So here we see we have an external range liquidity. Price has come into the internal range liquidity in form of fair value gap, and we see price has swept liquidity below this low. Now we want to see bullish prices because we have a change in the state of delivery that price has closed above, and we also see another proportion block because we see this change in the state of delivery and this opposing candle. We see price has closed also above it, so we can frame our trade using this idea. Now, using candlestick pattern, we see that price has sweep liquidity below this low, reject and close above previous day high. So this previous day high, price has closed above it. So the next candle, we want to see bullish prices. So now we see price is coming bullish. So here we see price leaving us with an internal range liquidity on the daily time frame. So what we need to see is that we want to see price coming into the internal range liquidity. Now the price has come into the internal range liquidity, we can go to our 1 hour time frame and see if we can have a structure. So here is the 1 hour time frame, and what are we going to do? We're going to start by looking at price range because we see price came into the fair value gap again. We have to look out for the daily range, that is from this low to this high. We have a daily range and we see price is coming into the discount levels. We have another block here and we can expect price to buy from this other block. But now we don't just buy on the structural time frame like this. We need to see another change in the state of delivery on the 1 hour time frame. So now we see we have price respecting the level. Let me remove this. And we see we have what we call change in the state of delivery because we see price of sweep liquidity below this level. And we have this down close candle, which is opposing candle. And this is our change in the state of delivery. Then we can have our trade right from the change in the state of delivery, and we can target the recent high. So we can have our trade here. Stop loss should be below this level, and the TP will be above this high. So you can see prices ranging at the level. So price came back to our entry again. Because the direction is bullish, you see price is coming into the other block, which is changing the state of delivery and hold. So now we see price is at our TP. Price came into our TP. So this is how you can determine your bias using this method, guys. If you're new to the channel, kindly subscribe. If you know someone that this video will be helpful to him, kindly share the video. See you in the next video.